All right. Good evening, guys. I hope you can hear me. If you can't hear me, you can just highlight it to me. All right. So what we want to do today is last week on Thursday, we did our first unit, unit number one, and a part of unit number two for management accounting. And what I highlighted last week is that management accounting, cost accounting, and cost and management accounting are very, very similar modules. Although they are done by different students, they are very similar modules. So sometimes I will be combining you guys, sometimes I will be sending you guys separately. But at the end of the day, we are just going to make sure that we cover as much content as we possibly can. And then, like I said, sometimes I will call you guys for a lecture, like I've done today, but sometimes I'll just send you guys a recording, a video recording of myself going through a specific unit. The reason for that, like I highlighted, is that for year two, we do not normally do weekly lectures, but what we do is we do what we call assignment lectures. So assignment lectures is we meet, we do the assignment together in the class, we meet, we do the KCQ together in the class, and then at the end of the semester, we meet and we do a couple of question papers together so that you are prepared for the exam. But during the semester, like a day like today, we'll just be sending through recordings that you can watch in your spare time as you go through the semester. And like we said, we also recommend that you attend the lectures from Mancosa. They will be very useful to you. Right. If you have not already joined the WhatsApp group, I have created a separate WhatsApp group for those that are interested. And we said the cost is 600 per module. If you have not already joined, you can just send me a WhatsApp and I will add you to the group. Then we expect the payments end of February, end of March, end of April, you can do in installments. So what we want to do today is we just want to continue from where we left off. So I'm just going to do a short recap of what we discussed last week, and then we can continue from there. All right, so I'm not going to recap on unit one. It was very straightforward. I'm going to do a recap of unit two, the items that we discussed, and then we can go into today's business. Right. So we highlighted that when you are doing management accounting or when you're doing cost accounting, right, one of the key elements is the issue of the costs that are faced by the organization at the end of the day. So you have to be able to classify the cost. So unit two deals with the separation of the cost or the classification of the cost. Then when you go to unit number three, you start talking about the cost of materials, right? And then when you go to unit number four, you start talking about the cost of labor and so forth and so forth, right? I think unit number five is the overheads, right? So in this unit, we're just trying to separate how can we separate between the different types of costs that are faced within a what? Within an organization, right? And we said that when we are trying to do that, there are certain key terms that we need to understand. We said a key term number one is the cost object, right? I.e., the item, the bracket item of what that cost falls under. So, like we gave you an example, is security services is a cost object, right? Stationary expenses is a cost object of an organization, right? And then we said that there is a cost center. A cost center is said where the location or the functional area where specific costs can be traced to. And we highlighted that an example is that the Coca-Cola plant in Eswatini can be a cost center, or the marketing department within Coca-Cola can be another a cost center within the organization, right? And then we said that there is the cost unit. The cost unit is the specific cost item that the organization ends up charging for. So, for example, if you are manufacturing Coca-Cola, right, a specific bottle of Coca-Cola becomes the cost unit, right? If you are manufacturing bread, one loaf of bread becomes the cost unit, where you say our cost, our packaging cost per loaf of bread, our transport cost per loaf of bread, our electricity cost per loaf of bread. So that's the cost unit. Then we said that there are costs that are relevant in decision making and there are costs that are irrelevant in decision making. We said relevant costs in decision making, it simply means that the cost that you would consider when you're making a decision on whether to increase production or to not increase production, or the cost you would consider when you're making a decision to choose between two specific choices that you have to make. And then an irrelevant cost is a cost that you are not going to consider. Yes, the organization is facing such a cost, but it is not important in the decision that you want to make. And an example of an irrelevant cost is called a sunk cost. That's an example of an irrelevant cost. An example of a relevant cost is called an incremental cost, right? A sunk cost is basically a cost that has already been incurred by the organization before the specific decision has been made. For example, the cost of a quantity surveyor if you're trying to do a building. The quantity surveyor tells you how much the building is going to cost. Whether you do the building or you don't based on the information provided by the quantity surveyor is irrelevant. You already paid for the quantity surveyor, so that's a sunk cost. So it's an irrelevant cost when you're making a decision. Why? Because whether you experience this cost or not is not going to influence your decision. You have already paid for that quantity surveyor, right? And then a relevant cost is an incremental. Hello? Is there a question? Okay, I'm just going to mute you for now. Okay. Then we said incremental costs. Incremental costs, you're basically looking at the additional costs that are going to occur when you make the decision. So if I say we want to make the decision to introduce a new flavor of Coca-Cola called Coca-Cola Lime, that's the flavor that we want to introduce. So the extra sugar, the extra water, the extra chemicals that we have to bring into Coca-Cola, those are the incremental costs, and they become the costs that are relevant in the decision that you're making as an organization. So those are like the basic knowledge that you need to know about what a cost is at the end of the day. I don't know if there are any questions there. All right, so now we go into cost calculation. So we already did this last week, right? Like I said, we're just revising for the next 5 or so minutes, and then we can go into what I want to talk about today. Right? So cost classification, there are 5 ways you can classify costs. You can classify costs by nature, by timing, by function, by behavior, or other ways, which we are not going to talk about. Other, it just means other. There are different other ways of classifying costs. But the ones that you need to be mainly concerned about are these first 4. The nature, the timing, the function, and the behavior of a cost. So when we are saying the nature of the cost, right, we are saying that a cost can either be a manufacturing cost or a commercial cost. That is the nature of a cost. It can either be a manufacturing cost or a commercial cost. When you're saying commercial, we are saying it's a non-manufacturing cost. So a manufacturing cost are the costs that are incurred in the manufacturing process, whether it's the materials that we are using, right, direct or indirect, whether it's the labor that we're using, direct or indirect, or whether it's the overhead of the organization. So that's the manufacturing cost. But commercial costs or non-manufacturing costs, we are now talking about costs related to advertising, costs related to administration, costs related to marketing, and etc. as the organization faces. So that's nature of the what? That's nature of the cost. Right. Then when you're classifying costs according to timing, it can either be a period cost or a product cost. If we are saying something is a period cost, we are saying that it is not directly related to the level of production, rather it is tied to the period in which you're operating in. So for example, if I am saying the rental expenses of our offices as an organization, it's not directly related to the production of the organization, but rather it is linked to the period, i.e. it is the rent for us to have the offices for the year 2025. Right. So that's a period cost. But when we are saying a product cost, we are saying that cost is directly related to the manufacturing process that is happening at the organization. Now, I want you to remember something that I said last time when we talked about this. I said that when you are classifying costs, we are not saying, if I say I'm classifying them by nature, it's different from timing. These things are interlinked in so many different ways because you're talking about the same cost. One cost can be an indirect cost, it can be a manufacturing cost, it can be, you see, it can be a product cost. It's just a way of classifying. Don't overthink about it. There are rarely exams that come about what are the different ways. The ones that are examinable, we are going to talk about them shortly. All right. Then you can classify cost by function, right? So if you're classifying cost by function, it can either be a direct material, a direct labor, or a manufacturing overhead. Right? So that's when you're classifying cost by function. So this is what I want us to focus a little bit on, and then also we're going to focus on behavior. In a minute or two, just give me a minute. Sorry about that, just needed some water. So with the normal exam questions that you get about these things, is your lecturer will give you a couple of costs and then ask you the question, can you calculate the primary costs or the prime costs of the organization? Or can you calculate the conversion cost of the organization? So when we have dealt with a classification of cost by function, if you were to add the direct materials and the direct labor that an organization used up when manufacturing a product, those are called the primary costs or the prime costs that the organization is facing. Right. But we also have what we call conversion costs. Conversion costs, we are basically saying that these are the costs incurred to convert raw materials into the product that we want it to become. So conversion costs are direct labor and manufacturing overheads. You cannot say primary cost plus conversion cost is equals to total cost. That would be a lie because there is an overlap. Direct labor falls under primary cost, but it also falls under conversion cost. So be very, very careful with how you treat direct labor, right? So that's by function. And then the last one is classification of cost by behavior, right? So we have got variable costs and we've got fixed costs. We talked about this on Thursday. We said fixed costs don't change. Variable costs change according to the output, right? So if your output increases, your variable costs directly proportionally increase. If you're manufacturing a drink, the more drinks you manufacture, the more sugar you're going to use, the more water you're going to use, the more labor you're going to use. But when it comes to fixed costs are constant. They don't change whether your output changes or not. For example, your rental, for example, your insurance, it's fixed every single year. It's not going to change. But however, under normal circumstances, there are what we call mixed costs. Right. So mixed cost, this is a combination of both fixed and variable costs that an organization is facing. It's a combination of both fixed and variable costs that an organization is what is facing. So what sometimes happens is your lecturer will give you, when it comes to separation of costs by behavior, when we're talking about variable costs, fixed costs, your lecturer can give you the total cost of an organization. Right? And it asks you to separate them and say, of these total costs, how much of them are variable costs? How much of them are fixed costs? Or your lecturer can give you costs of an organization for a specific period of time and then ask you to estimate what do you think is going to be the cost, the total cost of the organization in the next year or in the next month if they produce this amount of product. So for you to be able to estimate the cost of the organization in the next year, when you are given a specific amount of product, there are three methods that you can use. The same methods, you can also use them to separate between fixed costs and variable costs of an organization. So these methods are the high-low method, the scatter diagram, and symbol regression. Those are the last things that we want to do today. And that's what we had not covered in our lecture on Thursday. So that's what we want to focus on for the next 20 minutes. Okay, so let's start with the high-low method, right? So, all right, let me do it this way so that it makes sense. All right, so your lecturer can give you a question such as this one, right? Ignore it says simple regression there, right? It gives you information and it says that the organization produced the following units. In January, 100 units. In February, 95 units. In March, 110 units. In April, 120 units, etc. And then these are the total costs of the organization. In January, 15,000 units. In February, 14,500. In March, 16,000. And then he can ask you a question, right? The question he can ask you is, for example, in this question, assuming that we produce 250 units in January 2025, kindly calculate the fixed cost and total cost for January 2025. I'm assuming this was for 2024, right? I think I just forgot to write it, but this was for 2024, right? So you're being told, can you please calculate what do you think the actual total cost is going to be, right? The fixed cost is going to be and the total cost going to be in 2025. Another question that you might ask is, can you please separate this total cost and give me a column for variable costs, a column for fixed costs for these specific ones. And then you say, can you use the scatter plot method? Can you use high and low method? Can you use regression analysis method? All right, so that's what I want to teach you, right? So that in case a question like that comes in the exam, you know how to interpret it, you know how to work it out. So this is part of unit number 2. So I think let's start with the scatter plot method, right? So I'll explain it. We'll do this example together, and then you should be able to do it on yourself, right? So scatter plot method. So the scatter plot method is just a graph. What essentially you're going to do is you're going to take all of the information that your lecturer has provided you. And then once you have that information, you are going to plot a graph. And on that graph, you are going to draw what is called a trend line. Then that trend line will then show you the separation between the fixed costs and the variable costs of the organization, right? So let's do it together, and then you'll see it as we work it out together. All right, so I've already put this information into Excel to make our lives easy. So this is an Excel sheet. So this is the same question. You see the units produced and the total cost produced. So you're going to draw a diagram. So you can draw a diagram manually if you want, although I do not recommend it, but you can draw a diagram manually if you want. So if you want to draw the diagram manually, you're going to have something like this. On this side, you're going to have the cost. And then on this side, you're going to have the units. Right? And then you're going to plot and say, when we had 85, right? What was the cost? When we had 85, the cost was 13,500. And then you're going to plot it on the diagram. When we had 100, what was the cost? When we had 100, the cost was 15,000. And then you're going to plot it on the diagram. When we had 110, what was the cost? The cost was 16,000. And then you're going to plot it on the what? On the diagram and so forth. That is if you're doing it manually, right? But these days, you don't need to do things manually. Eh? You can just use Excel. Right? So in your Excel, we are just going to highlight all of the figures together, and you're going to go under Insert. And under Insert, you're going to go there on recommended charts, and then you're going to pick the scatter plot. The one that says scatter, that's the one that you're going to pick, and you're going to say, okay. So it is already, all of those dots there are the points that it is already given you, that these are the points of all of these things there. Then what you're now going to do is you now just need to draw a trend line. So you can, again, you can draw the trend line manually if you want. That's still fine. You can draw it manually if you want. That's still fine. So a trend line is just basically a line that connects all of the dots together. So I think this perfectly connects all of the dots together. Don't know about you, but I feel like I've connected all of the dots together with my trend line over there, right? So that connects all of the dots together. Or alternatively, you can also just use the trend line in Excel, right? But if you do it manually, you connect all of the dots together. Then how do you use now the scatter diagram to solve? So essentially what you have done here is the moment you did that, the moment you drew the trend line, right? The moment you had the trend line here, you are going to look for what is called the intercept. Intercept. The intercept is where the trend line intersects with your cost line, i.e. your axis over here, the vertical axis. So if you look at the intercept there, they're intercepting at the point of 5,000 Rand. So what this means is the intercept represents your fixed costs. So which means your fixed costs are 5,000 Rand because the intercept represents your fixed costs. So which means every single month, your fixed costs are always going to be 5,000 Rand. The only thing that is increasing is your what? Is your variable cost. So if I was to ask you, if I go back to January and say, what are the fixed costs for January? You're going to say it's 5,000 Rand. And if I say, what is the variable cost for January, which means you're going to say 15,000, which is the total cost, minus 5,000, which is the fixed cost, and then you're going to say the variable cost is what? It's 10,000 Rand. If I was to go to May and ask you, what are the fixed costs for May? It's 5,000, because fixed costs don't change. And then I say, what are the variable costs? It becomes 19,000 minus the 5,000, which is going to give you 14,000 Rand as the variable cost. Right. Hope that's clear. So let's go back to our slides and just highlight something there. All right. So in our example that we have done there, so this is the answer, right? So I've gone to Excel, I've plotted the points, I've done the trend line, and I've gotten my fixed cost of 5,000 Rand. And then I explained here, the intercept of the total cost line with the y-axis is 5,000, which represents the fixed cost of the organization. So therefore, right, if we go to January, like I was telling you, the cost of January was 15,000 Rand. But if we remove 5,000 Rand, we get a variable cost of 15,000 Rand. So now what we want to know is what is the variable cost per unit for this organization. So we then take any variable cost that we've calculated and we divide it by the number of units of that month. So for example, in January, we said the total cost is 15,000. The fixed cost is 5,000. The variable cost is 10,000 Rand, which therefore means that the variable cost per unit is 10,000 Rand divided by the number of units produced in January, which was what? Which was 100 units, right? Which is going to give us 100 Rand per unit. So 100 Rand per unit is the variable cost per unit faced by this organization. Now, because we know the variable cost per unit, we can therefore estimate what is going to happen in 2025. The fixed costs in 2025 are not going to change because remember, fixed costs do not change. So in January 2025, we are still going to face fixed costs of 5,000 Rand. What about the variable costs? We ask ourselves, how many items are we going to produce in January 2025? And the lecturer told us that we are producing 250 units. So if we are producing 250 units and our variable costs are 100 Rand per each unit, which means if we say 100 Rand per unit multiplied by the 250 that we have produced, we get 25,000 Rand variable cost. So if we take our fixed cost of 5,000 and our variable cost of 25,000, then we get 30,000 total cost. So that is how we were able to estimate the costs that we are going to face in January 2025 using the scatter plot diagram. Any questions before we go to the next one? All right, assuming all was clear. Right, so let's go to the next one, which is the high-low method. So the high-low method, I have some steps here. I'm going to give you these notes, or I've already sent them to you. I've got some steps here which show you exactly what you need to do. So the high-low method, the first thing is you need the data, which we already have. The lecturer gave us the data. The second thing that you do is you select the highest output along with the cost and the lowest output along with the cost. Third thing, you subtract the highest minus the lowest, and the cost also, you subtract them. Third thing, whatever answer that you come up with, divide the cost and the unit together. And once you've done that, you get the variable cost per unit. So again, it's just like the scatter plot. The idea is you want to know what is the variable cost per unit because it's going to help you. You want to know what is the fixed cost. You want to know what is the variable cost per unit. So let's apply this method in an example again. So again, we're using the same data, this data over here, right? That's what we are using, right? So step number one, we said get the data. So we have the data. Step number two, it says here, select the highest output along with the cost and the lowest output along with the cost. So if I go to my data, what is my highest output there? My highest output, if I check, it's 200 units. And the cost associated is 25,000. What is my, what is my lowest output here? My lowest output is 85, along with the cost of the 18,500. So I've done step number two, right? Just follow those steps, right? Step number three, it says subtract the highest and the lowest. So the highest output was 200, the lowest was 85. The difference is 115. The highest was 25,000, the lowest was 13,500. The difference is 11,500. So I have the differential output and I have the differential cost. Step number four, it says divide the differential cost, which is 11,500, and the differential output, which is 115 units. And if you do that, you get 100 Rand, and that becomes your variable cost per unit. That becomes your variable cost per unit. So the question that you then ask yourself, you now want to separate. So I'm going to take an example. Remember, in the month where we had 200 units, right? Our total cost was 25,000. So I want to separate and I want to know what was the variable cost here, what was the fixed cost here in this month. I think this was December. All right. So what am I going to do? Remember, I now know what is the variable cost per unit. It's 100 Rand per unit. So 100 Rand per unit multiplied by how much items were manufactured in that month, 200, right? So which means my total variable cost is going to be what? 20,000. So which means my total variable cost is what? 20,000. So what is my fixed cost? It's now 5,000 because I want it to add up to 25,000. So you can see I have separated between the fixed cost and the variable cost. Using the same principle, it therefore means that I can therefore assume that in January 2025, the fixed costs are not going to change, which means they're going to be what? 5,000. And then the variable costs, I'm going to use what I got there, 100, multiplied by how many am I going to produce in January 2025? I'm going to produce 250, which is what? 25,000. And if I add them together, I get 30,000. So which is basically the same solution that we got when we calculated using the what? using the scatter method. So whether we use the scatter method or we use the high-low method, we ended up at the same answer because the basic principle is the same. Although sometimes your answers might be slightly different, but the basic principle is the same. The answer should not be too different. They should be the same, or maybe just some commas can be different because there are different methods at the end of the what, at the end of the day. So this is the high-low method. If you check my notes, I've detailed every single step that you should follow from step number 1 up to step number 6. So you just follow the steps exactly as they are for you to be able to what? For you to be able to do this. Then the last method is called the regression analysis method. Right, the last method is called, that's the one that I know that it's a little bit more difficult, but it's not that it's difficult, it's just a lot of work to do regression analysis. I've rarely seen it in the exam, but we'll teach you anyhow. But I've rarely seen your lecturer asking this. The one that he usually asks is the high-low method. That's the one that he usually asks in the exams. But in case you get a regression one, we are going to go through it together. Right. So when you are using the regression method, the idea is there's what is called a regression equation. So this is our regression equation here, right? So in this particular case, Y will represent our total cost, right? Y will represent our total cost. So the total cost of the organization is equals to A representing our fixed cost, plus B representing our variable cost, multiplied by the variable cost at the number of units. Multiplied by the number of units. So total cost is equals to fixed cost plus the variable cost multiplied by the units. Right. So that's what that equation represents there. So the idea is you need to be able to use the information that the lecturer has given you to calculate what A is, to calculate what B is. X you already have. Remember, the lecturer already told you what X is. He says that in January 2025, we are going to produce 250 units. He has already given you X. X represents the number of units produced, which is 250, which he has already given you. So we are not calculating X, right? But A and B, you don't have, right? A and B, you don't have. You don't know what are the fixed costs. You don't know what is the variable cost per unit. So you need to separate the cost. So how are you going to do that? You're going to use this very complicated looking equation, right? For B, you're going to use that. For A, you're going to use that. Do not worry, we are going to go through it together. But that's what you are going to use. So let's go to Excel, and I'll show you how you do it. All right. Just give me a second. All right, so we're now in Excel. So I'm gonna just highlight here in red so that you don't end up getting confused. So the figures that I've highlighted in red, this is the information that your lecturer has given you. The figures that I've highlighted in what? In red. That's the information that your lecturer has given you. But you have this equation that you want to solve. So now I'm telling you what represents what represents what, right? So in this equation, whenever I say X, I am talking about the units. Whenever I say X, I am talking about the units. Remember, your lecturer has given you the units for January, units for February, units for March, units for April, and whatnot. So whenever I am saying X, I'm talking about the unit. That's why you see on top there, I wrote X, right? Whenever I say Y, in this particular case, I'm representing the total cost. So this is why you see I put Y there, 15,000, 14,000, and etc. So whenever I say N, I represent the number of variables, or let's say the number of months right? How many variables do we have here? We've got 12 months. We've got 12 variables that we are talking about. Right? So when you're solving for this, what are we saying? Wherever they says n, I'm going to change where it says n and I'm going to put 12 because n is 12. Where it says this thing here means summation, right? For those that might have not done this type of algebra, this means addition, summation. That's what it means, right? So it means addition. So if I say summation of xy, right, I am saying summation or addition of x multiplied by y. So if you see over here, I wrote x multiplied by y. So 100 multiplied by 15,000 gives you 1.5 million, right? 95 multiplied by 14.5 gives you 133. So that's x multiplied by y. That's xy here, right? So all of these things, these xy's that I've calculated, I have added them together here to give me the summation of xy. So that is why you will see on the final answer, I am going to, all right, let me see. Just give me a second. Let me see if I can just go and pick that up also. So that is very clear what I'm talking about. Okay, copy that. I want you to really, really see it so that it's not gonna confuse you later on. Can you see it in my notes? All right, there you go. So what am I saying? So n, whenever it says n, remember, we said we are going to replace it with 12. So this n over here, do you see I've put 12 over there? This n over here, do you see I've put 12 over there? This n over here, do you see I've put 12 over there? Right. And then where it says summation of xy, this thing here, I've replaced it with this figure here, which is this figure here, which is the addition of all of the x multiplied by y. 100 multiplied by 15,000, 95 multiplied by 14,000, 110 multiplied by 16,000, 120 multiplied by 17,000, 140 multiplied by 19,000. My answers are here, and I've added them together, and that's why I ended up there. Right. And then the next one, it says here minus summation of x. What is summation of x? This is x, remember? So I've added all of the x together. So this is summation of x. That's why you see I wrote there, it's 1625. Multiply by summation of y. What is y? This is y there. I've added all of the y's together and I came up with this answer over there. This is why you see it over there. So that's essentially what you're doing. Right. So to solve for this, the first thing you need to do is you need to create a table. If it is regression, the table is going to be the same. Don't worry. That what if they change something? The table is always going to be the same. Your table will have your x, which is your units, your y, which is your total cost, your xy, which is x multiplied by y, and then your x squared. This x and 2, it's x squared. I'm saying 100 to the power 2, 95 to the power 2, 110 to the power 2, 120 to the power 2, and I'm putting the answers over here. That's basically what I am doing there. So the table is going to be the same. It's not going to change. Then once you've completed your table, then you create this final row here where you add everything together. So if you add x, you now have summation of x. If you add y, you now have summation of y. If you add xy, you now have summation of xy. If you add x squared, you now have summation of x squared, which means you can then come and complete this thing. Because you now have summation of xy, summation of x, summation of y, summation of x squared, summation of x, summation of, you now have all of this data. The only data that you don't have there will be this one over here, which you're going to have to do manually using your calculator, right? Because this one says you have to say summation of x, which is this answer here, and then you have to square that. It's different from this one, according to mathematics. You know how mathematics is, right? So that's something that you have to be careful about, because this one says summation of x squared. This one says summation of x and then everything squared. So that's something that you have to be careful about, which means you're going to take the summation of x and then you're going to square it, right, at the end of the what? At the end of the day. So once you are done, you will notice that my second solution here for A, it still has got this thing here because I have not yet calculated this one. So I will need to first calculate B. Once I calculate B, then I can calculate A. Because without B, I will not be able to calculate A. Because part of the answer for A needs me to know what is B. Just take note of that. All right. So that's how you do it in what? In Excel. Then once you're done with your Excel, you now go back to your what? To your answer sheet. You put everything in your, where is it? You put everything in your answer sheet, and then you've got your formula. You've got your substitution where you put things in the answer sheet, and then you calculate. So once you calculate this in a calculator, you are going to get an answer of A is going to be 5,000 Rand, B is going to be 100 Rand. Those are the answers that you're going to get if you put this in a calculator. A is going to be 5,000 Rand, and B is going to be, I think I'll need to add that so that it's very clear. Okay, let's do this so that it won't confuse people later on. A is equals to 5,000 and B is equals to 100. So that's what we came up with from the answer. So once we have done that, we go back to our what? To our regression equation. Remember, y is equals to a plus bx, or total cost is equals to fixed cost plus variable cost multiplied by x. So what is our total cost? It's equals to 5,000, which is the fixed cost, plus 100, which is the what? The variable cost multiplied by x. And what is x? X, we said x represents the what? The number of units. X represents the number of units, the units produced, right? Which is 250. So 5,000 plus 100 multiplied by 250 is going to give us 30,000. So again, using the regression method, we arrive at the same solution, just like the other methods that we used. We arrive basically at the same solution. But I said it's not a guarantee that you arrive exactly at the same solution, but more or less, most of the answers will be similar. It's just that sometimes if the lecturer fails to set it correctly, there could be little differences. It might be different with some commas or just a little bit of some runs, but most of the time you should arrive at the same solution, because the methods are just trying to help you to separate between the fixed cost of the organization and the variable cost of the organization. So that is how you do a simple regression analysis when you're trying to separate between fixed cost and variable cost. So I've given you guys an example which you can do in your own time. You can use this data to simple regression to calculate or to estimate the cost for September. You can use the high-low method, or you can use the simple regression method. If you face any problems doing this homework, you can contact me. We can help each other out to see where the problem is or where you're not understanding. So that brings me to an end of unit number 2. That brings me to an end of unit number 2. So I'm hoping we are going to meet again this week to do unit number 3 for, what is it called? Materials, unit number 3 for inventories and materials. So we're going to do a lecture for unit number 3. We're also going to do a lecture for unit number 4, which is labor. Then once those 2 lectures are done, you might not see me for a little bit, but I will send videos. I will send videos for absorption costing, for all the other classes that we might not have done. I will send through videos, and then most likely we are going to meet further on, maybe in March. But for now, we want to just try to make sure that maybe this week and this weekend we cover unit number 3 and we cover unit number 4. So unit number 3, it's material handling. We are going to combine you for that one with the management accounting guys. And then unit number 4 for labor, I'm not sure if we'll combine you or not, because there may be some differences here and there, because you guys do text. So there's a little bit of text issues, but I'll just check if you'll be able to combine with the other guys. Then you guys don't do statistics this semester, so it's fine. Because I think tomorrow I'm going to be doing statistics with some of the guys. Then also, I'm not sure if we should do a lecture for business law or I'll send a video. If we don't do a lecture for business law within this week or a weekend, I will send a video, an introduction to business law video. Right. Then by the end of what day is it? I think by the end of the weekend, you should have at least a video in each of the classes that we're doing. So including individual tax, concepts of financial reporting, those ones we're not gonna focus on live lectures. We're mainly going to focus on video recordings. But if there are areas which are tricky, for you guys, you can always request and then we can spare an hour or two for those specific areas so that we can go through those areas with the tutor. But you're mainly going to get recordings. The ones where you're going to get a couple of lectures here and there for now will be business law and cost and management accounting. But for individual taxation, and what's the other one? Concepts of financial reporting. You are mainly going to get videos for now until at a later stage, maybe towards when we want to start to do the assignments, then we're going to have the live lectures for the assignment and then a couple of live lectures for exam revision. All right. I hope you have a wonderful evening. Good night. Unless if there are questions, sorry, maybe I rushed, maybe there's some questions.
Then just waiting for your recordings and your calculations on Excel. Then we go.
All right, cool. Thank you, guys.
Indeed.
All right.
All right. Thank you, everyone.
Bye-bye.